There definitely is that sense of reaching way beyond, what you want, and you'll negotiate back to something probably better than what you ever expected that you'd get. Because people just need to search for yield so much that they're willing to buy a 30-year bond at a 0.5% yield, which is completely bonkers. Who in their right mind thought it was a good idea buying 30-year bonds with a 0.2% yield?
Hello and welcome to this week's Closing Bell. We have a really big episode today. I'm Callum Newman. As always, I'm joined by Murray Dawes. We're here at Factail Investment Research and we're talking about three big things today. First of all, Muzz is going to make a big call on the S&P 500. He's going to pull the trigger. We'll talk a little bit about what's going on in Japan and why that might be very, very important indeed for the markets. Then we're going to look at a trade idea that we suggested here on the Closing Bell a few weeks ago and see how that's going and why it might keep going. So, Murray, thank you for joining me.
G'day, Callum. How are you?
Now I'm very well, thank you. You were saying earlier that you're going to make put your neck out there and call it. So let's talk about the US markets with the leading stock market. So what's the big news that you've got for us today?
Well, I've been umming and ahhing on this market. It really has been tough, and it still is. When you have a market that crashes and then recovers just as quickly, I mean, any technical analyst is looking at momentum and trends and this and that, and it just throws everything into haywire mode. It makes it really difficult to analyse what's going on. I mean, is it the short-term weakness that you've got to think about, or is it the quick bounce back, meaning it's bullish? It really can be difficult. So I've been sort of analysing this from the point of view of saying that this massive sell-off is something to be wary of. And I've been pointing out the sell zone in that S&P 500 as a major point, which is the 5,800 to 6,000 area in the S&P. That's what I've been focused on. It's the sell zone of the whole correction. And so what I'm going to do is look at that really up close, go into that real minute sort of analysis of what's been going on the last week, which is increasing my confidence that this really could be an area where we see another leg down from. And today is actually the sort of final day people have a chance to go and read my white paper on Big Wednesday. We're actually closing that down, never to be seen again. And I'm doing it now, just reopening it for a few days for people to have a look at it because of what's gone on and the setup that we're seeing now, which I think could be the beginning of the next leg down. And I want to even put my neck out and say, if you're willing to have a crack at this, it probably is for those short-term traders a pretty good opportunity to have a look at.
All right, so you're going to show us the chart, right?
Yep, so let's jump to the chart, and I'm just looking initially at the daily and really just looking at that whole correction that we saw over that last few months, and everyone, that probably was a bit thin, there we go. So there's the whole correction, and the thought is, is that just a quick correction and then all of a sudden everything's going to take off again? And we really are at that final point of decision where it's saying, look, if this does, head back above the all-time high there, you don't have much excuse to be bearish, that's for sure. And my weekly trends are still pointing down, but pretty much everything else is bullish, right? So we've got a massive long-term uptrend. We've got the daily trend is up at the moment. The weekly is the only thing that's the hint that, just be a bit wary here. And the way trends move, I can show you a million examples that especially when it's going down, is that you'll have really big recoveries which squeeze everyone out, the short squeezes. And this is where I'm saying often this is how these downtrends evolve. And you've got to be aware of this because the best opportunities, your best risk-reward opportunities, if you really think the market's going to start trending down over a long period, well, you want to be looking at these major waves, looking at the recovery. And I can tell you that is the spot where you make your money, getting on just before the next wave down.
So
and especially as it continues on.
Shorting the market.
This is shorting the market or maybe lowering your exposure or what have you. So that's really how it often works. Everyone gets bullish again. And so that's where I really analyse very closely what's going on in that sell zone area. So this is this It's a 75 to 87.5% retracement of that previous wave. So of that low, it's like up here, it's just the odds of a reversal occurring, which goes back to the midpoint of that whole wave. That would be down at 5,500. We're currently up at 5,900. It's just the odds of that are pretty good, especially if you've got bigger picture bearishness, worries.
Well, we still have the tariffs and still in play
exactly,
all over
still
the place.
coming,
Yeah.
and that Japanese crash in the bonds we'll look at in a minute.
And we should say too, you said last week, you've got a very good place for your stop loss, because if the market goes up through the previous top there, then
exactly, that's the whole point, is that your risk reward at a point like this is really good. So if I'm just saying, right, well, if I get short around here, and I know that above here, let's say above the all-time high, I'm definitely wrong. What's my upside? Well, not only is it initially to that midpoint, but even if it has a swing all the way down to the bottom of the range that we've been in, there's your potential upside there. And just imagine if this is the beginning of another whole wave to the downside. We've got much more to come. I mean, that's you're looking at massive risk reward as far as a trading point of view. But then you've got to pick it at the point when momentum has actually turned down.
Yeah.
And the fact is, the daily trend is still up. So you can see here the 10-day moving average, the exponential moving average above the 20-day simple moving average. So the daily trend hasn't even turned down yet. So this is very, very early days. This is just analysing the very short term. You can see the momentum has turned down. So that's the daily MACD momentum.
Yep.
So this is where you're saying, okay, the momentum is waning at the moment in the area where you want to see that happen. So you are seeing some selling pressure coming in. And this is where I just want to go up close for what's happened just in the last few days. And just yesterday actually, I was getting really nervous because Nvidia's earnings came out, and in the overnight market, it opened up 100 points, the S&P. So it was up here, right at the top of that sell zone area.
Oh, yeah.
And I'm like, oh God, this could just break out and blast off to the all-time high and be there in a few days. So it's like right at that point where the weekly trend's still down, but if it kept rallying, it's like, wow, watch out. It could really take off to the upside. So this is where I was watching it like a hawk, and woke up that next day and found it really interesting that we've had that retest of that 6,000 level, which I've been talking about for quite a while, as the top of the sell zone of that area, and it sold off all night and closed near its lows. So for me, that's another rejection, a second rejection. So if we have, and I don't know where the market is now for people on the Saturday, you people will get this afternoon, so it'll be before it actually goes. But tell you what, if we do see another move to the downside, especially if it's a bad one, that will be setting up a beautiful little situation where you're getting to the edge of that daily trend turning down. You've had two rejections from the top of that sell zone, and that's where you then get that setup, which could be the beginning of that move back to the 5,500 area. So it's still touch and go, but I like the way that's moved, and I reckon that's what we're about to see is a bad night or two coming next week. And if I move to the weekly just quickly, this is where I'm saying the weekly trend is still down. It's gone to retest the top of that sell zone. So any weekly sell pivot from here, so let's say next week has a bad week, goes back under the 10-week moving average within that downtrend, I'm telling you that's the starting gun of that next wave to the downside. So go and have a read. You'll see the link below the video today to check out the Big Wednesday. It'll probably be the top comment in the comment section, and also just below you'll click on that more in the YouTube video and you'll see a link to that white paper, which will explain why I think this is what could be coming, and to get prepared for it.
Well, let's put some real world context around it, because you mentioned Japan at the start of the show, and the idea being that yields are rising over there, and that could cause money to come out of Western asset markets. Is that correct? Is that
Yeah,
one of the risks?
well, if the bond market over there really does collapse more, and you've got those interest rates on the 30-year yield and the 30-year bond and the 40-year bond, really trying to find the right level, I guess, because after years and years of suppression of the whole yield curve by the Bank of Japan, and with their rates at zero on like 10-year yields.
Yeah, that was crazy.
And then the 30-year yields are yielding close to that because people just need to search for yields so much that they're willing to buy a 30-year bond at a 0.5% yield, which is completely bonkers, right? So now that they're off that yield curve control, the long end of the market has to find the right spot. And so we're now seeing quite a sharp move, which is a collapse in the price of those bonds, which is what it should really do, moving up to sort of 3%. But you know, what is a good yield to get for 30 years of risk of inflation, of what could happen? You know,
Appreciation
2%, exactly. You've got so much risk, and people paying such low yield. No wonder that the yield's going up. But there's massive losses. Like the value of those bonds went down about 30%, the 40-year bonds, just in the last 2 months. So just imagine the huge losses. And with these sort of events, which can be crash-like, often it's a few months later that you hear about the dead soldiers that need to be dragged out who have lost, you know, who have blown up. You know, often no one talks about it initially, and then all of a sudden it goes, oh, this pension fund's actually just gone under, or whatever it is. So
well, that was in Britain in 22, right? Remember the gilt crisis with the Liz Truss and all that?
Yeah, exactly. So these big moves in the bond market are really important to watch. So let's just have a quick look at the bond market.
And we should say Japan is still a big economy. It doesn't really...
It's the third biggest bond market in the world.
You know, it's not at the fore of most people's minds anymore, but they own a big chunk of the US Treasury market too. So something that plays out in Japan could play out in the US bond market. And that could pressure the US stock.
They're a massive investor in US bonds, US stocks, and everyone with the carry trade, etc., etc.
The tariffs, I was just reading the other day, the Trump's tariffs on Japanese cars. I mean, that hurts their industry. That's not good for Japan either.
And just look at this. I mean, this is pretty amazing, right? This is
Huge,
the 30-year bond going back to 2007, right? So here is the lowering in yields going down to a crazy level, 0.2% on a 30-year bond. Who in their right mind thought it was a good idea buying 30-year bonds with a 0.2% yield?
It was the central bank suppressing everything.
Well, suppressing, and everyone just searching for yield and just moving that yield. But that is completely mad. So we've had the move higher, but it's still a 30 yield at 2%. Seems ridiculous to me. But look at what's happened here. From 2% up to 3.2% in a straight line. That is a real crash in those bonds. And whoever's holding them, Bank of Japan, of course, holding half of them. But big pension funds, like that is some massive losses handed out. And we know
it's
that
going to play out somewhere, basically.
And they can say, oh, if we just hold it to maturity, we haven't actually lost anything. But if you've bought them with a 1% yield and you've got to hold them for 30 years at that 1% yield to not take a loss,
well, they're getting slaughtered.
And you're getting slaughtered by inflation. You're getting slaughtered in real terms. So this is
at the same time, Japan's demographics are appalling.
Appalling, exactly. Yeah. And their debt to GDP is 250%.
That's why I think it's even more than that.
So this is a really important development, and it could play out as time goes on in other ways of money getting repatriated to Japan. With that, if the US dollar is going to be pushed down to rebalance trade, if you're a Japanese investor and you think they're going to devalue the US dollar, now's a pretty good time to start selling the Magnificent Seven and the bonds in the US and repatriating if you can get a good yield in your own domestic bonds, even if they're 10 or whatever. So there's all of this.
So in theory, the yen should play go out, right?
Yeah, it will if this all happens and if there's a rush to do it quickly. The carry trade unwinds. Mrs. Watanabe, the local Japanese household investors going offshore. Investing. This has been going on a long time with that very low yield curve in Japan, which has really fed the boom in assets all around the world for a long time. So if that's finished, there can be repercussions that could come from this.
And we did have a taste of that. We said it the other week too, that in August last year, there was that mini flash crash
Exactly.
in the market. Not
That
as
was
bad
a
as
little
April,
hint. That's a
but
hint
that
of
was
what
the
could come.
Japanese carry trade unwinding. So very interesting in terms of your thesis and where the market's going from here. That said, it's not all that bad. So we did want to bring up a stock idea that we shared at the start of May, which was a little stock called AFG, which I got you to chart. And this tees on from central banks as well, because last week I said that I think the RBA wants higher house prices and to boost domestic spending and that type of thing. And so obviously the market will start hunting for a housing recovery and that type of thing. So do you want to, let's just put the context around it. Let's go back in time to AFG and you show us what you were talking about then about how the stock might break out.
Yeah, well, if Belvedere can bring up the chart from, which is just a screenshot from a few weeks ago, from when we did the first chat, and you'll see that sharply rising line that I was showing there, saying if it broke out above that range, it really could take off to the upside. So that was the sort of prediction at the time of what could happen based on what the chart was looking like. So let's just have a quick look at what it looks like now.
And I remember you teased everybody a little bit because you didn't quite give the final
moment
to get your service.
To jump in. Well, it ended up really taking off from the moment. So you can see here, it's pretty much followed the script perfectly as far as breaking out above that resistance and really taking off. So, we were looking at...
And just to put clarity around it, this is it deals with mortgages, it writes its own loans and... takes a cut from, it's got 4,000 brokers that it's associated with. So,
and it was around $1.80 when we were chatting about it.
Yeah.
Right. And so we were looking at it, and I was saying that there was the most recent or lowest high in the downtrend was that level there, because I was just looking at the way that the downtrend was evolving, and you can see it quite clearly, the sort of wave structure. You're sort of following all these waves down. And I was just saying, look, if it heads above that lowest high level, it could just take off. And I was saying, look, it could do work and go and revisit the long-term moving average, but it could just be the proof that that downtrend is finished. And then you've got a target which is heading to the sell zone up around 260. So it's not even there yet, but that could be where it goes in the next few months, because it's already done the work. It's cleared everyone out. You've got the rounding bottom here in the buy zone.
Remember we talked about that on that day.
Yep, in the buy zone, and then you've got the blast off. So there's a good depiction of the sort of things we look for.
And I just thought I'd add, there's a guy interviewed in the AFR this week, and he talks about AFG as being one of his ideas in his fund. But he made the interesting point that they're actually on the ASX anyway. There isn't that many ways to play a recovering housing market these days, because a lot of them have been bought out or what have you. And so when you get a narrowing of options like that, you can often get the market crowd into a name like that. So it'll be interesting to see what it does over the next 12 months, actually. So really interesting to see. And did you want to mention Roblox as well? I don't remember you talking about this one.
Well, this is when I was on my own.
Solo.
Solo. And
Roblox is a game stock, isn't it?
Gaming stock. The reason I brought it up is because I've poured more money into Roblox than I care to mention from
that's
Daniel.
Why you're
that's why I've been tracking it, because the amount of money I've poured into this thing for Daniel wanting to buy himself a nicer car in a game or something. And I thought, Jesus, if there's billions of kids doing this,
same thing
it could be absolutely massive.
With Nintendo.
And this is similar to the AFG story of a big crash and then a long-term clearing out of positions and then getting ready to turn up. This is where you get an idea of how these things can move. And I actually did a presentation, and hopefully if you did buy this one, by the way, can you leave it in the comments and say...
Yeah, we need more comments for Belvedere's inbox. We didn't get that many this week.
If you did get on it, I'd love to know. So I gave this at $50, and they came out with a results, and I thought the result was really quite good, and I thought, well, this could be the catalyst for it to break out. And so what we were looking at was, it's been stuck in a range for a number of years after a big clear out, and this is how the market works. Everyone gets bullish and long here, then you have the crash, and then everyone's getting cleared out of their positions for ages, and then you have the rounding bottom. You can see the long-term trend turned up there. You had the beginning of an uptrend here, and this is where you've got the long-term uptrend turned up. I've got the beginning of an uptrend, And then we got the good announcement at $50, and I actually gave that, because I don't trade the international stocks at the moment in my services, I gave it for free to the closing bell people.
Let's just talk about that for a moment.
And here it is, $50 up to 85 in a matter of months. So that's a massive move.
I was going to say, you're like tabling the idea of doing international stocks. So if you're interested in Murray doing an actual service with the international stocks, to put the comment in the box, because there's just so much opportunity.
Yeah, well, I think there is more opportunity overseas.
Bigger markets.
And there's so many much better companies. You can actually put in filters of company actually making money and growing earnings at 20% and growing. You can look at all that and say, wow, they actually are. They exist. Yes. They're not rare as hen's teeth like in Australia.
Yeah, we do have a lot of specky stocks here on the ASX. Well, speaking of which, I did want to bring up Taco. So the idea here is going around is that Trump always chickens out. And so if the market dips kind of thing with the tariff fear, you buy it back up because he's always going to walk it back kind of thing. What do you think about that idea?
Well, I think we know. I've actually read his book. What is it? The deal making book?
No, Art of the Deal.
Art of the Deal. Yeah. So I'm in the middle of reading it. I really like it, actually. It's a great read.
Okay.
And, there definitely is that sense of reaching way beyond, what you want, and you'll negotiate back to something probably better than what you ever expected that you'd get. So obviously he's probably doing that. People are cottoning on to that idea. I think also Trump is probably realising when he does these things and the market's crashing that, boy, there's a big repercussion from this. This isn't a real estate deal. This is the whole
global
stock
financial
market
system
crashing. So he's playing with fire, and I think sometimes he gets a bit nervous. He'll have a lot of people in his ear.
He would.
And I think he's trying to manage the situation of, I want to be forthright and strong in that we are going to do these tariffs unless we get good deals. But also when the market's at the point of nearly completely crashing, the bond market we saw when it was really selling off badly, then I think he maybe takes fright a little bit and walks it back. But I think he still does want to.
Well, they do have the problem of financing that deficit, which he does want to do with tackets. I also did think it was funny that it came out as tacos.
I quite like that.
He's not famous for his love of Mexico, obviously, where we put the tariffs on them and deporting all the immigrants. So that was kind of funny. Also of note with Trumpy was that Elon Musk is stepping away from that sort of close little brotherhood that they were developing there to go back to Tesla. It seems to be leaving a little bit with its tail between his legs, because he's sort of, Tesla came under such pressure with their brand and that type of thing, and doesn't really have achieved that much with that Department of Government Efficiency type of thing.
Yeah, it certainly hasn't. The numbers they've been, I haven't seen many big numbers that they've
achieved.
Yeah,
much.
I think he's done a lot of great work. Getting rid of people over 120 years old on the social security system.
Well, we'll talk about that in a second. The other thing, we might get you to chart Tesla next week, actually, again, if you want us to, Murray, to chart something, because there's obviously the car angle, which is they're losing market share to the Chinese guys, but there's also the robotics angle with the Optimus robot that they're developing. And in theory, in 5 years, robots might be doing, on oil rigs and what have you and all that type of thing. So Tesla is a fascinating stock. And what I mean is that I remember 2018, everyone poo-pooed it. It didn't make money. It had a bigger market cap than, all the other car makers together. And that was back when it was, I don't know, $50, and then it went to like 500 in the the massive surge type of thing. So it's a fascinating aspect to watch. So also, you dabble in robotics and that sort of stuff. So you've got a bit of
tinkering. I love tinkering around with it. Yeah,
for sure. Not many people know that about you. So interestingly enough, speaking of the guy that's 120, we have got a stair lift here at the office, and because Deirdre, the HR lady, who's Belvedere's mother, actually, she needs help getting up the stairs, and then Woody's mum, and then your mum's she's 91, so we're on the first floor here at Woody's office. So you kindly offered to tinker with it to get it working
put it together.
Again.
Yeah, no, it's great.
Anyway, that's good. And we also, speaking of Belvedere's inbox, somebody asked, was the boxing real with Woody last week? And absolutely, we should actually get a footage of him. He's in ripping form, and he really did have that boxing fight. So
it was a great fight.
That was a ripping fight. Alrighty, so let's sum up the message for this week. You're concerned about the big picture for the market, that we could get a big sell down. Within that, there's always opportunities, like we saw with the recent sell down. Things shuffle around, interest rates are going down, so some, like AFG, some of those real estate related stocks are moving up. That's basically your message right now, right? But there could be an opportunity to directly short the market.
Absolutely, yeah. I'm going to stick my neck out. You see a big bad down night and we get a bad week next week, something like that, and I reckon that could be the starting gun for a big sell-off.
All right, well, keep an eye on that, and this week we will leave you with footage of Muzz's work on the chair there and Deirdre having a crack going up the stairs here at the Fat Tail office. Enjoy that, and we'll see you next week.
All right, see you guys.